Vincent, I'd love to keep asking you about the property sector, but I do want to get your thoughts on the other story that we're tracking, and this is China's, of course, chip ambitions here with this announcement of this big fund. There is this argument now that Biden's chip act is a lookalike to Made in China 2025. I mean, this has been around for a decade. This is nothing new. But the way that China is playing this seems to be very reactive. So in terms of this $47.5 billion that China's come up with, is this too little too late?
Well, okay, to start with, I think if you're talking about semiconductor, the real issue is that up till now, China has big difficulties to access the really top-notch frontier skill set as well as machinery. So it's, in a way, no matter how much money China put in, it doesn't really matter. It's, well, 2 nanometer, 5 nanometer, it will take a long time for China to really get to the TSMC level. But I think what China tried to do is, indeed, they were quite successful, is they tried to get a stronghold on the so-called legacy chips, those chips that are not frontier, but anyway, need anywhere. And if China, and these kind of semiconductors actually is much more driven by capital rather than technology. So you put a lot of money in those areas, you build up a large production base, you create a situation. Actually, this low end or this legacy chips may not need the technological frontier, but they generate quite a lot of cash flow because we need to use it. So I think from China's perspective is that they will try to do R&D, they will try to do whatever to catch up on the really frontier semiconductor. But I think everyone knows that it will be difficult at the moment. But however, they can put money in to build a huge capacity, which I think no other country has that kind of monetary resources to build a really large capacity at the mid to low end. And if I somehow corner the mid to low end, then, well, simply building the high end left to the developed world will pose to start with, it will make China less vulnerable because anyway, when you look at high end, low end chips, a lot of things like automobile, household appliances, really just use low end chips. You don't need to really use high end chips. So anyway, you satisfy a large chunk of your demand to start with. And secondly is that, if you can really dominate this space, you actually can cut out a lot of cash flows that can go to the developed world high-end semiconductor production companies for them to do R&D research to continue to keep the gap on the really frontier semiconductor. So I think, in a way, China right now is that, because anyway, it's a catch-up semiconductor, no question, China is paying catch-up. So they pay a catch-up on the one hand, they try to do some R&D and try to get whatever hands they have on semiconductor equipment to somehow catching up, not losing too much on the really frontier. But in the low end space, mid to low end space, they just will try to use capital to dominate the market. And then I will cut out the cash flow available to you, to the developed world to do their own set of research.